Hello and welcome to Good Returns TV. I'm Tristram Clayton, and joining me here today in the studio is Anna Scott, CEO of Smart, formerly Smart Shares. Now, Anna, today we're going to do a deep dive on ETFs. Tell us about them. What are they and how do they work in relation to an index investing?
So firstly, quite a lot of jargon in the financial world. So that's another acronym that comes into that. So it's an exchange-traded fund. So that means that it's available for buying and selling on the exchange, but it is a fund structure. And we have those funds in an unlisted fashion in New Zealand as well as listed, and this is the listed version of it. Nice.
What are the benefits of investing in ETFs as opposed to individual shares?
When you buy a share on the stock exchange, you're buying a share of a stock. When you buy a fund, you're buying a unit in that fund. When you buy that stock, you've made a single choice. It's like going to the ice cream store and choosing, I'm going to have strawberry versus putting together a bunch of different flavours that you want to have in your ice cream sundae. So that's the same idea. If you think that you want to invest in the New Zealand economy, then you're picking one share of the stock that you want to buy in that. Whereas if you buy a fund, you can have a range of those. And that's when we talk about market tracking. So that we're saying this is the NZX 50, and you're going to have a share of all 50 of those because that's what our collective fund tracks.
Nice. I like the ice cream analogy there. And obviously the downstream advantages of that, tracking the whole economy or tracking the whole sector, is the almighty diversification, right? And I'm guessing lower fees.
Totally. So we call it, instead of looking for the needle in the haystack, you're just going to buy the whole haystack, and that is the diversification. So you instead are betting on a market and a sector, perhaps. So sometimes we do disaggregated views of those. So you might have something that's mid-cap in the US, and it's a certain range of those rather than the whole US 500 in terms of the market. But that is the benefit. You don't have to pick the winner. You're buying and following that whole growth of that market in general, and that's what we call diversification when you're spreading your risk a little further.
And even though you are spreading the risk, there's still a lot of choice within there, right?
Yes, there is. So we have 40 ETFs at the moment and some more that are coming. And so in that range, you've got some that we would call the core. So if you look at a person who's a wealth advisor, or you might have your own view on diversification, then in your asset allocation, you're going to hold a bit of Australia and a bit of America and some emerging markets and some New Zealand. So you're putting all those ice cream flavours together. So we have some that represent all of those markets. But if you also have a view that you particularly think that you're interested in the growth of healthcare as an industry or robotics and automation, then that's where you get that specialist slice, and that fund represents that specialist market.
Right. So how can, you've touched on it there, but how can investors use your ETFs to build a core portfolio?
The great thing about ETFs is that they are listed on the exchange. So anywhere that you're usually going to buy and sell your shares and equities, you can do the same with your ETF. So you can do that via online brokers in New Zealand and online trading platforms. You might do it through a broking participant of the NZX or an advisory participant who have access to a broker and can do those trades. So you can absolutely do it there. And then you can do it direct with us at Smart. So and the difference here is when you're buying and selling on the market, those are existing units in the fund. And so as long as there's a willing buyer and a seller, then you're going to do that trade, and then you can have them buy them whenever you want at your leisure, as it were. If you come to us, we issue brand new units in the fund. So those are brand new ones that we create, and we do that process monthly. So a lot of people choose to invest with us on that monthly cycle because they're putting some of their pay away, and it's an accumulation strategy. And the benefit of that is you don't pay brokerage because we're issuing a brand new unit rather than you trading with someone else.
Gotcha, super clear. And what about those new or younger investors? What advice have you got for them when they're starting off on their ETF journey?
The great things about ETFs is that they are on the market. So they're accessible, as we've talked about, but they're also liquid and transparent, so you know what the price is at all times. So it's a great way when you might have your app or you're looking at what you want to hold in your stocks that you can absolutely try and pick some of those winners and where you think you have a particular interest, but you can also hold some of that diversification in general markets and general views. And you can buy and trade them alongside of your other stock choices that you want to make. So it's a really nice fit to say you use them to supplement, or you could have a whole portfolio of them and you're just spreading your asset allocation out.
Brilliant. Anna Scott, CEO of Smart, formerly Smart Shares, thank you so much for coming and speaking with us.
Thanks.